Number three is coordinating your rebalancing strategy in a similar way to what you've done with capital gains. What rebalancing means is every so often, if you have an investment set up to rebalance, what you're trying to do is you're trying to constantly buy low and sell high. So, for example, let's say that you have an investment portfolio that has 60% stocks and 40% bonds. Well, throughout the course of a year or a quarter, some portion of those stocks and bonds are going to outperform the others. So maybe throughout the course of the quarter, all of your stocks are doing really well, your bonds are really not. So when you get to the end of the quarter, the outperformance of that stock may mean that now you have 65% stock and 35% bonds. And what rebalancing does is sells the outperforming stock, which means you're selling high, and it uses the proceeds of that sale to buy into the low performing bonds, which means you're buying low. And you start the next quarter back at the initially intended 60-40 split. Well, if it's a non-qualified investment, which is taxable, when you sell those portions of your portfolio at a gain, you are kicking off taxes. So what some people will do is they will coordinate the taxes that come from their rebalancing with charitable contributions to negate the impact of the sold investments. For example, if you sold $10,000 worth of investments at a gain that was going to generate $1,000 worth of taxes, you might find the equivalent contribution to a nonprofit that you need to make to negate the taxes that are due from the rebalancing sale. And I promise you, if all this sounds like it's more effort than it's worth, you have probably not been in a situation where you're staring down a $5,000, a $10,000, a $20,000 tax bill, and you're trying to figure out what happened. But when you take into consideration all of the things that can lead to an additional tax bill, like the under withholding of your income or bonus income or restricted stock or not paying quarterly taxes, these are the small things that you can do throughout your charitable giving and your investments that can make a substantive difference if you have a coordinated plan.